macro indicators seem to suggest that the logistics industry has now reached the pre-COVID levels. Is that a sense that you're getting, that things are now back to normal?
Absolutely. I mean, we're doing phenomenally well. And I think the important key points is that, first of all, our business, TCI Express business, is driven on the economic growth. So next 10 years is poised to be a phenomenal growth opportunity for TCI Express. And not just, and in the short term, as we look at, the COVID has gone away, and then, and then we're not having so much of all these lockdowns and everything. It's a much clearer path to better top line and bottom line growth. So just to give you an example, for the 10 years, I have TCI Express will have an EBITDA of about almost 3,500 crores and PAT levels of 2,000 crores, and out of which we will be investing 1,000 crores in the next 10 years. Now, all this will be through internal accruals. Nothing is going to be on debt. So I think that itself shows that, it's a good place to be in, and the business is going to be prospering as we go along.
Your newer segments like cold chain and your servicing to the pharma sector, how's that shaping up? And also, if I understand it correctly, you were also looking at automating your sorting centers, and that was expected to reduce the throughput time substantially. What's the update on that?
Sure. So the sorting center is in its trial runs. And I think it's going to be quite glorious when we open it up to the public, with photos and videos and all of that. So, it was started only in the month of March. So I think in full swing, it'll be operational by end of May. End of May. So that I think the real benefit will start seeing in Q2. This is something which, has never been done on this scale. And later when I'm in Q2, when I talk about it, it'll be quite interesting to see that. The new businesses, of course, the cold chain is a very small proportion. Let's not forget the C2C, which is growing phenomenal, and which is growing like almost 100% year on year. And the rail business, rail B2B business. So I think, it's only a matter of time. We started that business last year, and we'll see the benefits coming in. Like I said, 10 years, 3,000 crore, 3,500 crore EBITDA, and 2,000 crore PAT. So I'm quite confident about that.
Big numbers coming to you from the management of TCI Express. But before we let you go, Chandra, quickly a word on your CAPEX plan as well, because the focus was on creating a pan-India presence, and there was a next leg of CAPEX cycle expected with an investment of 400 to 500 crores. What's the timeline that we should be looking at, and what will it do to your balance sheet and your debt as well?
So we don't have debt. We're a debt-free company. Everybody knows that. And it's all through internal accruals. The investment is intact. It's all through internal accruals. We will be investing about 1,000 crores in the next 10 years, 500 crores in the next 5 years. So at the moment, our financial ratios are also very good. Our return on equity is about 25% plus. So I think it's all in place. This year already, we will be investing about almost, this year meaning last financial year, we invested about almost 80 crores. And going forward this year, we will be investing about another 120, 130 crores.
Okay, Chandra, we'll let you go on that note. Thank you so much for making time and speaking to ET.